back to the same point, what you are seeing is a manifestation of the consumer market in quite a few ways, if you leave the business part aside. So the consumer market, as it is deepening, as the consumer spend is increasing, it is finding a way to manifest itself in some of the models. Even areas like logistics, as an example, are just getting redefined because of the way the products are getting distributed. So there is a lot of value you can potentially create in the logistics value chain.
All right, so still positive about this space, and it is set to grow. Another space that you have built enough expertise, and you've really put your bet on the companies, some of the IT companies at a very nascent stage, which are over billion-dollar companies now. But at this time, when I speak to you, the IT sector is facing several issues of its own. The overall global environment is not that great. Apart from that, they have their own issues, like probably promoter-driven issues or coping with the automation and change in technology as well. How do you see the overall space, and what is going to be the defining factor for the companies or the next successful companies in the IT space?
I think the easiest way for me to put it is that the solutions of the past are not going to work in the future. I think in the past, this was a very metrics-driven business, which was all around utilization of people and charge-out rates, the kind and nature of clients and verticals you were focused on, how fast you were growing, which geographies you were focused on. So there were several metrics on the back of which this business has been created. However, the next 5 years are going to be different. So in my mind, the companies which are closer to clients, which are willing to redefine their business models and make sure they don't carry on what they have done in the past, thinking that we can do incremental changes. And if we were growing 7%, let's grow 10% or 12%. I think those are the companies, and accordingly are ready to make changes. Changes in management, changes in structures, changes in how they've done business with the US companies, setting up onshore development centers, etc. Those are the companies, in my mind, which will do better.
So key to technology has always been to change with times, to evolve. We've seen floppy totally be obsolete. So that's the situation we are in probably once again. But Ranu, we'll talk much more about even KKR invested in the company, and after that you have grown many-fold. We'll talk about that and much more when we return. We were talking about the KKR investment. It's been an association of over a year now. So how has that really helped Avendus Capital catapult itself to another level, and where are we seeing this relationship going forward?
So KKR came in as an investor in the company, and they own a majority stake in the company now. And this happened in February of last year. And I think there are two things which have happened post that. One is we have geared up for the new Avendus, or version 3.0, as I like to call it, which is not just an advisory-led business, but an advice plus balance sheet plus differentiated products business, which is more suited to the market. And second is, essentially, there have been a lot of macro-level disruptions in financial services. New areas have emerged. Traditional areas have been completely kind of extinguished in some cases. And there are very clearly, in our minds, areas which we can probably put more capital in. The overall perspective for us when we took the KKR investment was to become a more diversified financial services business with more relevance for the mid-sized entrepreneur, the entrepreneur who's growing his or her company. And that has happened in a good way. I think with both these trends, it has led us on the path of institutionalization, which has been a long-cherished dream of the founders and the key managerial team. And it has also led to, in some cases, us to do things which we didn't do earlier. As an example, having Andrew Holland and his team with us for a very specific, kind of a business to build. Likewise, an acquisition of a company very recently we announced, which is Ocean Dial.
So what does Ocean Dial bring to the table for you? What does this acquisition mean? And talk to us about the entire alternative asset management business that you have built now.
I think I'll take your second question first. I think Avendus as a firm and we as founders have been very focused on keeping a tight group of businesses which we can build. In India, you can do a lot. And the idea here is to focus our energies, resources on a few businesses where we think enough value can be created along with our partners. And there we felt there are pockets where I would think there is scope for more excellence, bringing in excellence. There are two pockets we identified. One pocket was digital, and it came very naturally to us. Avendus does 1 and 2 transactions in digital and technology. And we felt there are areas we are able to see ahead of others. We are able to see the trends in businesses. We are able to see what might be investable, not investable. We are able to see risks clearer. So we, in a partnership, started this business called Zodius.
Yes.
And that invests in growth stage digital companies and has made significant number of investments. We've put in about $130 million into that. And the second pocket we identified where we felt some innovation and excellence is possible and hence value can be created as public equities.
All right.
And I've been a great fan of public equities for the last 10 years. I've seen the public equities people always gaining at the expense of the private equity folks, to the extent that a lot of private equity was going into public companies.
That's right.
So there are two strategies we've identified. One is a strategy where we go into specific areas like long, short, and other products with Andrew Holland, Vaibhav Sanghvi, and team,
Yes.
which we took on board. And the second is more with Ocean Dial, which in my mind is a truly differentiated platform,
Right.
managing about 500 million pounds out of London and having a very distinct group of investors
That's
from
right.
Europe and London. So the perspective is, can we grow that piece by putting in whatever we have in India and US?
All right. So you're putting all the jigsaw pieces in the puzzle and making a full portfolio for yourself at this point. But what about the credit business? How's your loan book shaping? And KKR Investments has given you the balance sheet support for growing that business.
Candidly, the opportunity set is very large there. And I think that we have been a bit slow to take off there, but we are doing things the right way. We've set the right processes. We've taken on board senior leadership, and hence we are now trying to build a business which is focused around giving solutions to clients.
Right.
For us, it's not another product. It's not a sale of a product, but it's more about what does the entrepreneur need, and can we, in my words, put flexible capital behind that entrepreneur.
All right.
Because in India, with the way companies are growing, they don't need regimented kind of capital, which sometimes banks give them easily.
That's right.
They need more flexible capital.
So amongst all the businesses, apart from investment banking, which is your cash cow and the flagship business still, which one is it that you are betting most on? Wealth management, alternative asset management, or credit?
I think it's a very hard question to answer. It's like saying which of your kids do you like more than the other?
Which one will grow faster than the other?
I think it's in our scheme of things, these are all engines where we are putting enough resources. We've divided responsibility amongst the senior management, the founders, on how we build each of these pieces separately. Too early to say which of these businesses will catapult more than the others.
Right.
But I think all three of them, and investment banking, of course, has been a star for us last 18 years. All three of them are showing the right signs, both in terms of growth and in terms of metrics.
All right. Still at a nascent stage, but growing well. But investment banking is what I am very interested in. So we'll take a short break and we'll come back and talk more about investment banking space of Avendus Capital. Stay tuned. We are chatting about the investment banking space of Avendus Capital. So straight going on to that, Ranu, how is this particular space developing? What are your focus areas? And where is the most amount of M&A really going to pick up from, besides the debt space that we are already seeing, which is ready to really burst, in my opinion?
Yeah. Our market is slightly different. We are dealing with Indian families, Indian businesses, in areas like industrials, specialty chemicals, digital, of course, which we spoke about. So there are these areas which we consumer, logistics, and the needs of companies in these areas are different. And I would put them in two categories. One is a need for growth and growth capital, and finding the right partner who can finance that growth.
Right.
And hence go to either private equity or IPO or whichever route you might want. And the second part is more to do with how do you want to divest that business, or what's your horizon? Is your horizon in that business a 10 to 20 year horizon? Is your horizon on that business a much shorter horizon?
Right.
To give you an illustration, if I built a business for my family over the last 30 years, and I see better opportunities for me to invest my time and capital over the next 10 years, I would try and sell this business and go into the new generation businesses. So those are the kind of questions which I think a lot of these business owners are asking themselves. And quite often the next generation is pushing them to ask the same question.
All right.
And so there are hard questions they're answering, and quite often the answer is M&A.
Right. So which way is the trend going? You're saying old businesses, sell off the old businesses and do the new generation businesses.
If you cannot reinvent them, if you are clear in what can be the next big opportunity for you to spend the next 10 to 15 years on, very often the answer is you divest the business.
Is there enough cross-border M&A also expected? How are the foreign investors and strategics looking at India?
Well, I think for one, the interest is high. I think they've seen a very consistent, growth-oriented, and in some manner, a government which has introduced several, revolutionary reforms in the market. So I think there is a lot of excitement. Now, how does that translate into deal making? There are smaller factors which come into play. A smaller factor like valuation.
Separate.
Like a valuation.
Yeah, or the regulatory hurdles.
Or the regulatory hurdles. But valuation, for one, given the way listed companies, particularly in the mid-sized companies, the valuations are going, valuation is likely to be an impediment to transactions.
Of course, with the way the equity markets is just generating so much euphoria around each company, it's in fact, private equity players are finding it hard to spot a particular company at decent valuations to invest in. But how do you see, with the IPO being the big theme at this point, it's the flavor of the season, so many big IPOs really lined up. What is the comparison between IPO and a private investment right now? What are you focusing on more, and why would there be private investments?
I would say, as a vendors, we are focused more on the private equity part of the business and much less, almost negligible on the capital markets or IPO side. But to draw out the difference, very clearly companies which have reached a stage of maturity, when both from a predictability perspective, scale perspective, guidance perspective, growth perspective, they have more clarity. For them, IPO seems like a reasonable option. And that window doesn't open every now and then. It's a window which is open, and
while the going is good,
just get in and
while the sun is shining.
However, a few companies have taken a call that they are too early, or they're not prepared, or just the systems which are required for a listed company. They're much more comfortable handling one partner, as opposed to addressing the queries of a couple of hundred analysts.
But they're still linking their valuation expectations to the IPO market, which is quite buoyant right now. And that could be an impediment, as you shared as well. So Ranu Vohra, thanks so much for such a candid conversation and for giving us insights into your business and bringing to us the expertise that you have gained over several years. Thanks so much for joining us on CNBC TV 18. Thanks. Thanks so much for tuning in to Big Deal, and keep it with CNBC TV 18.